Hello, everyone. My name is Wade Cook. We're sure glad you're here, and I commend you for being here. I believe in knowledge. I believe in the wise application of knowledge. I believe in productive knowledge, and by that I mean knowledge that will make you more money. Now, I love getting knowledge just for knowledge's sake also, but sometimes it's good to know that there's a difference can be made in the level of knowledge that you have. This webinar today is about getting assets to produce income, treating the stock market, we'll get there in just a minute, like a business. And by that I mean it produces business income. It's not just an investment. It's an investment that makes money. And I'm talking cash flow now. And you're going to see two really good deals today as we get near the end, right? You're going to see some pretty cool stuff. I also really like quality questions. A lot of people, they don't get it. They don't understand. They'll say, well, is this a good investment? Instead of asking, what else could I be doing with my time? What else could I be doing with my money? Now, we're going to get to the 3 benefits of ownership in just a minute. But I need to ask you some of those quality questions right now. And so here's one of them. This is the first question in the first paragraph of the first book that I ever wrote, Real Estate Money Machine, which was this. Would you rather have $1 million or what $1 million would do for you? Some of you might say, whoa, if I get $1 million, I can live on that. Well, yeah, you might be able to live on the principal, but do you want to deplete the principal or pass it on to your family? Well, if you want to pass it on, you got to keep it together, but it doesn't make enough money to live on. My goodness, you'd have to have $10 million just to pay for a good car payment and rent, So some of the traditional ways of making money are just not going to cut it. So I need to ask you another question. Let's just say for fun, I need to pick a number, right? I like the number $9,000 a month, all right? And I like that number. And I'm going to spend a lot of this seminar today, this webinar at the end with some numbers and some figures that are going to help you see a pathway, a road to getting up to $9,000 a month. Now, why do I pick that number? Well, that number times 12 is over $100,000 a year. And I think a lot of people want to be there. They need to be there. They would live a lot better. They would be able to take better care of their health. They would be able to buy a nicer home and travel a little bit more and have more fun with their family. But $9,000, it's about double what the average American. If you take the single people and the married couples, the married families, and you put them as an average, it's a median income, it's right around $4,800 to $5,200. So I'm going to say that this would be double. And there we go. This would be double what the median income would be, for a family or a single person. So I keep coming back to $9,000. And so I asked myself the question as an educator, writing I've had the 4 New York Times best-selling books, but how dare me think that I can help you make $1 million or even $100,000 a year if I can't show you how to make an extra $500 a month? Now, if you're a young married couple, tell me what $500 extra a month could do for you, because I'm going to show you some ways today to make that extra $500 a month pretty darn easily, getting assets to produce income. Now, just a little time out there. When I say assets producing income, I mean you don't have to go to work. You get your assets working for you. And I suggest to you that your money needs to get a job. Why? So you can quit your job, at least part-time, right? Your money needs to get a job. And so if you go back and read my very first books back in 1980 when I first started into the lecture circuit, my goodness, I was teaching the same thing then that I'm teaching now. Put the emphasis on making more money. The investments and everything else will take care of themselves. And we're going to get to that in just a minute. But we need to get assets producing income so we can live the lifestyle that we want, so we can spend more time with our kids. And by the way, that's what I think that this country needs. I think this country needs 3 things. Number 1, parents spending more time with their kids. Number 2, parents spending more time with their kids. And number 3, parents and grandparents spending more time with their kids. And virtually every problem we have out there would go away if we could intergenerationally tap into the power and the strength of family and building a family dynasty. Well, let's talk about that for a second. For many of you listening right now, you're it. You're the first link in a chain that may spawn generations to come in the future. You don't want to be the weakest link. You want to build up and be the best link. Well, the way you do that is to surround yourself with really good quality people. You quit hanging around with a bunch of losers. You hang around with people that know about productive knowledge. They know ways to get income coming in so that the income will support you and you can have that time freedom and the money freedom to really live a quality life. All right, so my theme for the last several years, especially with the economy being in the doldrums, is for you. And I hope the whole economy would, when I look at this new president, we've had a nice little Trump bump, but I wonder where the slump is. Well, we don't want a slump with the Trump bump. We want everything to just keep going, but to grow out of your problems. So if you look at that as a country, how do we grow out of our problems? Well, the key word is locked into that sentence. It's the word grow. It's the word growth. Right? We need to build growth. That will create more jobs and more income, and everybody will be better off. And you've heard the expression about the rising tide raises all boats, whether big or small. Well, it's true. But sometimes we don't just want to sit around and wait for Washington, D.C. We want to build up our own income. We want to build up our own asset base. All right. So if you got your outline out now, remember, you can go print it out, or you could have it right there and fill in the boxes on the screen. We're going to grow out of our problems. We're going to pay off debt. We're going to, we're not going to become a victim of any economy. We're going to figure out ways, despite what they do in Washington, D.C., we're going to figure out ways to grow out of our problems. All right. So let's look at the benefits of ownership. That word benefit is kind of important, and we're going to cover that word benefit here in a different way in just a few minutes. But there are 3 reasons for investing. There are 3 reasons for going into business. There are 3 things that we want from our money, right? They are, and you can fill it in right now. You see the C and the F on the lines right there. They are cash flow, tax write-offs, the second one, tax write-offs, and the third one is growth. Cash flow, tax write-offs, and growth. Now, you got all 3 of those down? Because I'm going to put this one over here as income. Of the 3 of those benefits, what do you need more of now? And what do you need more of in the future? What is it? Yeah, tax write-offs are nice and growth is nice, but I suggest to you that you need more income. More income will let you buy all the tax shelter type investments you need or want for the future. More income will let you buy investments that may not produce a lot of income. And there's the problem, everyone. I'm going to try to do this with my hands, and I don't know if they show up on the screen very well, but what do you need? Assets or income? How do I get my hands up there? This is, there you go.
There we go.
Assets or income? What do you need more of? Assets or income? See, assets or income. Think about that. Because far too many people have assets that don't mean anything in terms of income, of producing income. They've tried rental real estate and it worked or not. A lot of people go into businesses. A lot of businesses don't make it. They go after, so I'm suggesting to you that you go after income. Now, a little time out here, and I'll get back to my little hand juggling. All right. Investing should be to solve problems. Going into business should be to solve problems. Have you ever thought about that? You look at a piece of real estate and you look at cash flow, tax write-offs, and growth. Go back to your little diagram there on your outline. Cash flow, tax write-offs, and growth. Why do you buy a piece of rental real estate, a duplex or a single family house? Why? Well, some of you will say, well, I want another property that I own growing for my retirement. Good solution. A lot of people can't even verbalize that. Okay, why do you invest in the rental real estate? Because you want the rental income. And you want the rental income to pay the mortgage payments so that you've got an outside source of income coming in from renters that will pay the payments. A lot of you will say, well, I'm a doctor. I make $300,000 a year and I need tax deductions. Okay, good. There's a great reason for real estate. I love real estate, guys. Don't get me wrong. I just don't think most people are cut out for investing in real estate the traditional way, but I made my first fortune in real estate. Right? My first book was Real Estate Money Machine. It's still on the Wealth Information website that you can buy my first book. And by the way, that's the first book you'll ever see 40 years ago that used the word flipping houses. It's pretty amazing. Flipping houses. I was flipping houses before half these guys out teaching seminars on flipping houses were born. Right? But come back to solving problems. Isn't that what you need right now? You need your money to go to work and solve problems for you. But I suggest to you, go back to cash flow, tax write-offs, and growth on your chart. What do you need more of right now? And what are you going to need more of when you're 40, 50, 60 years old and it's time to retire? It is cash flow. It is income. Right? And you can do anything and everything you want financially if you build up your monthly income. So here's the point. Back to my little diagram here with my hands. Right? A lot of people go out and they try to acquire assets. I suggest to you that you focus on building up monthly income. You don't need a bunch of assets that even cause you to have to work harder to pay like an excess rental bill or something like that. Cash flow, tax write-offs, or growth, assets or income. What do you need? What do you want? I suggest to you it's more income. It's assets producing income. Here's the problem. For a lot of you watching right now, you're it. You are your only asset. You've heard income producing assets? You are your only income producing asset. I think you know that. And if your asset doesn't go to work, there's no income, right? So when I came along, my first days out teaching seminars and what I learned as a cab driver in Tacoma, Washington, made my first fortune in real estate, was building up a different grouping of assets from you that will produce the income that you need to live on. I will never forget that. My first seminar ever in San Jose, California, at the DoubleTree Hotel. It was about taking and me as an educator, helping people build up a grouping of assets that will produce the income that they need to live on. Now, I'm going to show you some real ways to do that here in just a minute, right? And using the stock market, treating the stock market like a business. And I'll tell you why most people have never learned this. They've never discovered this. All right. So we're going to solve problems. We're going to build up income. We're going to increase the quality of our lifestyle. All right. So there's your question. At the bottom of those cash flow, tax write-offs, and growth is why real estate? Because with real estate, you can get them all at one time. And with real estate, you can get them with small down payments. You don't need a lot of cash to get started. All right. So there's why real estate has been so popular. And that's why I made my first fortune in real estate. But then, it's a lot of work. And I came along and I said, there's got to be a better way of doing a stock market or some other business. So I was in another business. I was out teaching seminars on real estate. And I went into a movie theater. I love going to movies. I still do. I went into a movie theater in Santa Monica, California. I was living in Arizona. And man, it was really cool. There was these runway lights up and down the aisles, and it was called Cineplex Odeon. A remnant of that is still around. And I said, this is a beautiful theater. Went back to the hotel room, called my stockbroker, and I said, have you ever heard of this theater? He looked it up. It's a Canadian company back then. It was CPX was a ticker symbol, CPX, Cineplex Odeon. And I said, well, what's the stock going for? And he said around 3. So I bought 1,000 shares, $3,000. No big deal, right? But then I noticed, like everything else in the stock market for me, it went right down to $2.50. Oh, what a bummer. I bought it at $3,000. Now it's worth $2.50, $2,500. Dang it. But I still own the stock, right? Well, sure enough, 4 or 5 weeks later, the stock went back up to 3, to 340, to 350, right? I didn't do anything. I said, man, that's cool. I hope it goes to 100. But it didn't. It went back down to 2.50. And 4 or 5 weeks later, it was back up at 3.50. So the next time it got down to 2.50, it was kind of in reverse. Instead of selling it first, I bought another 1,000 shares at 2.50. And then when it got back up to 3.50, I think it was 360. By the time I sold it, it was 350. I sold all 2,000 shares at $3.50. And I made about, well, 500 on the first batch and about 1,000 on the second batch. Well, I kept 1,000 shares going. And the next time it got down to 250, I bought another 1,000 shares and then I sold it at 350. So this stock, as a good investment, this stock was going from $2.50 up to $3.50. And then it would go back down to 2.5 and it would go back up to 3.5. This is what I call rolling stock. It's a stock that goes in a sideways pattern, right, between a support level at the bottom and a resistance level at the top. This was my first love in the stock market. I think you can guess why. Because it produced income. $1,000 after commissions, it was $910. Man, oh man, I thought I hit the mother lode. Because here I was very, very busy out doing seminars and all that. And I could call my stockbroker and I could say, well, buy another 1,000 shares. And he just got in the habit of it. You want to know something? Over the next several years, I did this 38 times with the same $2,500, $3,000 over and over and over again, repetitiously doing this rolling stock. Well, we find stocks all the time that are in rolling patterns. A lot of them don't last much longer than 6 months or a year, but it's called rolling stock. That was my first love. It's my second or third love right now. Let me tell you my first love. My first love is letter D on your outline, which is writing covered calls. Now, as you flip through that, I'm going to explain what that is. Writing covered calls is a way of using the stock market as a business. Part-time or full-time, that depends on you, right? If you want to make more money, the question is, what do you have to do for your money right now? What is the quality of your life in regards to your money-making endeavor? What education have you had to gain? What are the price to be paid in going to work or working for somebody else? What do you do? What is the quality of your life in regards to your money-making endeavors? And I'm going to suggest to you and to, well, I think you know this, a lot of people are not very happy with their lives because they go to work, well, they live lives of quiet desperation. They live lives that are not fulfilling to them because they're not really doing what they want to do. Now, by saying that, I am not going to suggest to you that I'm going to teach you this really cool way of making money in the stock market, and you're going to be able to use that way, you're going to be able to use that way, and it's going to become your passion. It's going to become your life. Nah, I've been in this business too long of helping people get retired. And that's what I consider myself, by the way, a retirement expert, helping people build up income so they can retire at 42, 52, or 82. Right? But I would be naive to think that everybody's going to get a passion for writing covered calls or rolling stocks like I have. And by the way, I got enough passion for all of us. I'm going to invite you to participate in our service here in a little while, our TDT or $1,000 Thursday. I'm going to share with you what you can do to tap into Team Wall Street. I'm going to explain what that is and what it does in just a few minutes. All right, let's talk about writing covered calls. All right, writing covered calls is simply getting assets to make money, to produce income. Okay, that's it. It's getting assets to produce money. Isn't that one of the main reasons why you would do rental real estate? Well, I'm going to do this as rental stock. Okay, rental stock. The similarities will end, but a lot of you have rental real estate. You understand that. You got a property that you hope grows in value. It's taking in money, right? And you're using that money, somebody else's money, your renter's money, to pay the mortgage payment, hopefully any other expenses. In the same time, it's growing, and in the same time, you're able to depreciate it, take some of those paper losses, which might be changing here with the new tax bill coming out, but it's to get cash flow, tax write-offs, and growth, all at the same time with the same investment, and you don't need a lot of money to get started. Well, the stock market comparison is only going to go so far. But I really want you to think about something. This is why I like writing covered calls in the stock market. What is it that makes it work? It is income. Listen carefully now. It is income from a third party. It is income coming in from a third party. What would your rental real estate look like if you did not have rental income coming in? What would it look like? You'd have a vacant property sitting there, you know, hopefully growing in value, but probably not now, right? Vandalism and everything else. See, it's a third party. What makes J.C. Penney's or Macy's or whatever work? What makes Amazon work? It's not that they have a great idea. It's not that they have this service. It's that they're selling things. They're bringing in money from an outside source. Now, you can go buy Amazon. Maybe they'll share some of their profits, a dividend in the future, maybe not. But what makes it work is sales. It's income from an outside source. So people look at other kinds of investments and they say, well, what can I do? All right, let's go invest in gold. Wonderful. I love gold investing. I think everybody should have money tied up in some gold bullion coins. The eagle, the gold eagle. I love it. What about the income? What about income on your gold eagle? Nothing. You're not going to get any income. Okay, so you say, no, me, I love antiques. I'm going to figure out antiques, right? Artwork, precious, anything. I'm going to go do that. And then you say, well, where's the income? Well, there is no income. With most investments, there's no income. Even people that get involved in the stock market, you can go buy stocks that will pay a dividend. They'll share some of their profits with you. And that's really cool too. But we do need investments that produce income. Well, most investments in the stock market do not. Most people invest in the stock market hoping they're not going to get hardly any tax write-offs unless you do REITs or something like that. Most people do the stock market for growth. Talk about growth stocks, equity growth, increasing in value, and you see it all around us. My goodness, Amazon and Apple and Google, they've done very, very well. The stocks grow in value, and that's what people get out of it. But they don't make any money, right? They don't make any money. And so we're going to change that right now. We're going to show you writing covered calls. For all of you that, that think you know about the stock market, maybe you do. Maybe you know a lot more about the stock market than I do. But I'll suggest to you right now that nobody in this country knows more about writing covered calls than I do. I've done tens of thousands of trades, 29,000 trades in all, and I love the stock market. That's where my passion is. People say, well, aren't you the real estate guy? Yeah. But you know what? If I had $10,000 to put into real estate or $10,000 to put into the stock market, knowing what I know about writing covered calls, I would choose the stock market every time. My goodness, $10,000, maybe a small down payment on a $150,000 rental house. Well, what's it going to make you? If the rents coming in are really high, hopefully they are, it might cover the mortgage going out, because the $10,000 was a down payment. In the stock market, $10,000, I'll show you by the end of this presentation right now, could easily make us $800, $1,200, $1,500 a month. All right, hang around, because I'm going to give you some real deals and some real numbers, and I hope you get real impressed, because it's about time that you take the bull by the horn. It's about time that you get knowledge. And if it's not your knowledge, at least somebody else's knowledge. And I'm over here raising my hand saying, hey, I'll go out and do the research. I'll figure out what the billion-dollar traders do, and I'll share it with you. All right, so let's go. We're at the top of page 2, where it says stock options, a definition. A stock option is a derivative of an underlying stock. Macy's, J.C. Penney's, AKS, which is AK Steel, United States Steel, Amazon, Google, whatever, right? An option is a derivative. It's of the stock, and it gives you the right. That's what an option does. Gives the right to buy a stock at a certain price, a set price, on or before a date, which is called the expiration date. All right. Let me try to explain what that means. Let's say that you really like Intel, right? That's a good one. Micron Techno, whatever. Intel's around $34 or $35, and you really think it's going to go up. So you call your broker and you say, well, Intel, INTC, Intel is $34. And you call your broker and you say, well, how much is the right to buy Intel at $35? Let's say next month. And he tells you, well, it's $1.40 by $1.50. All right. Now, I'm trying to give you a quick lesson on stock options. There's a lot of stuff in my books about it. I think that you'll love it because it gives you a chance. It's not a down payment, but it gets you a chance at using a form of leverage. All right. Let me show you what it means. So the stock's at 34. You like it. You think it's going to go up. So you buy the $35 call option. Now, there are two types of options. There's puts and calls. If you think a stock is going to go down, you buy a put. If you think a stock is going to go up, you buy a call. And this is the bid and the ask, $1.40 by $1.50. And your broker says, well, it'd be $1.50 to buy it. Right now, options are in 100 share contracts. So let's buy 10 of them. Let's buy 10 contracts. Well, what is 100 times 10? Now, I'm doing some math on you. I want you to figure out if you like this, because, numbers are not for everyone, but I'm going to make a case that they should become your best friend, right? That would be, 100 shares times 10. That would be 1,000 shares that you would control, and you would have to pay, 1,000 times $1.50. 10 contracts would be $1,500. Now, how do you make money on that? And what is that? This is an option to buy the stock on or before the third Friday of, say, March or April, right? It's a chance to buy this stock, an opportunity. You have no obligation. If this stock stays right at $34 or even goes down to $33, you do not have to buy it. This is not like a futures contract where you're obligated to buy something. No, you have a right but not the obligation to buy a stock at a certain price on or before a certain date. Well, how do people make money on this? I'm going to go to another pad here, okay? Here's our Intel at $34. We have now purchased a $35 call, right? We paid $1.50 times 10 contracts, or times $1,000, right? And we have paid $1,500. Now think about that. Think about what you've done. You have locked down the right to buy 1,000 shares of Intel at $35. Man, think about what you control with just $1,500. And I'm going to ask you to ask yourself another question. Why do so many people lose money at options? I'll show you that in just a minute. But let's stay excited just for a second, okay? What do you want this stock to do? You want this stock to go up and go up quickly, right? You've got the stock at 34. You want it to go to 35.50. You want to go to $36, $37. If this stock goes up to, say, $36, that option, if it happens quickly, that option could be easily worth $1.90. Wow. $1.90. A couple days ago, you bought this thing for $1.50. Now it's worth $1.90. And you call your broker. And by the way, that's one reason why I like the stock market as a business, because it takes 18 seconds on average to do a trade like this. 18 seconds. What else are you doing in business that takes 18 seconds? So you call your broker or you get online and you put it for sale and you get it off at $1.90. It'd be $1,900. It's not a lot of money. Right? You see the profit there? $1,500 up to $1,900. You made $400 for 2 hours or 2 days or 2 weeks, right? You've made money on this trade. Wow. That's exciting. And I can teach option seminars all day long and get everybody excited. And yet many, many people lose. And here's why. When you do this option trade or have a stock trade, there are one of three things that can happen. One, the stock is going to go up. Two, the stock is going to stay the same, maybe move sideways like a rolling stock, but sideways in a it's not going anywhere pattern. And or three, it's going down. Let's see how you make money. Remember, you bought that option for $1,500 for $1.50 per contract. Well, contract's 100. All right. Let's do the last two here. If the stock stays the same right around $34 and you have the right to buy the stock at 35, you see that your right's going to diminish down to zero, right? You're going to go, well, you might lose all of it at the very beginning or part of it along the way. All right. What if the stock goes down to 33 or so? You're going to lose, right? So this way you lose if the stock stays the same. If the stock goes down, you lose. All right. So let's move this one down here and give it some space, right? The only way you're going to make money is if the stock goes up. All right, well, let's go there. Let's say that the stock goes from $34 up to $35.50. Hey, it even goes up to $35.90. Oops, $34.90. Well, let's just say $35, right? Now the stock's at 35. Well, that's what you said, right? That's what you thought. You thought it was going to go to $35. You're all excited. But remember, you have the right to buy it at 35. And as time goes away, all right, so a little time out on that. The reason why people lose at options is because they have an expiration date. Whenever you have an investment with an expiration date, right, the time value goes away. right? That's why most people lose. I'm going to show you in just a minute how to get on the other side of that, how to take that thing, that scenario, that set of factors that if the stock goes the same or down a little bit, where you still make money. All right. So what happens? Right at expiration day, the third Friday of next month or whatever, your option is worth what? You have the right to buy the stock at $35, and the stock's at $35, and there's no time left. So this whole excuse me, $1,500 has gone away, and you lose all or part of it. All right. So just remember, up, the same, or down, what are you going to make money? You basically have a one half of one chance in 3 of making money. If it goes down, you lose. If it stays the same, you lose. If it goes up slowly, you lose. All right. So you can get as excited as you want about options. I don't know anybody that's as traded as many options as I have. And I'm pretty good at it. But you know what? I hardly ever teach straight options. If I do, it's always don't do them. Right? They're just too risky. Don't like them. They're just too risky. So I studied, again, what do billion-dollar traders do? Because, see, there's a lot of people out there that will say, hey, Americans, you're not smart enough. You can't understand all this. Give your money to us, and we'll manage it for you. Not Wade Cook. Matter of fact, Wade Cook comes along and says, hold it, Americans. You are smart enough. You can figure this out. I'll go out and study what the billion-dollar traders do. I'll distill it down and figure it out and come back and share it with you. Share it with you so that you can use what the true experts, not the retail stockbrokers, no, the true experts that manage and control billions of dollars. So let me give you an example. Matter of fact, let's use, it says under letter E there, it says a real deal. We're going to do that, but we need to do some definitions first. All right. So you have the words on your outline. Again, writing a covered call. What does this mean? Whenever you see the word writing in the stock market, it means to sell. Like write up an offer, it means to sell. So instead of buying a call option, we're going to sell a call option. Well, when you sell something, what happens? You take in money. Remember, that's the money from the outside source. Somebody out there in Never Never Land is buying options. Well, we're going to sell to all those weird people, all those crazy people, all those risky. Is that right? Risky or risque? Risky. All those risky people. We're going to sell those people the option. They take the risk. We take their money. All right. So here we go. Writing means to sell. The word covered means that we actually own the stock. So a covered is the stock ownership. Okay. And then a call. Well, we just covered that. A call is a call option. Typically, it gives, when you buy an option, it gives you the right, but not the obligation. Got that? Right, but not the obligation. But if we sell, if we write a call, right? If we sell a call, we are taking on an obligation to do what? Not to buy the stock. Other people have bought the right to buy the stock. We're taking the obligation on to deliver the stock to them, to sell the stock to them. And we take in cash to do so. All right, so let's give you a real life example. Letter E, letter F in your example, it says a real deal. All right, now I got to get my list of real deals here. These we're on a Saturday morning webinar right now, and these are prices as of yesterday. Okay, I'm going to show you AKS. Right, AKS is kind of a fun deal. It's AK Steel. There's a lot of talk about the pipelines going in and using U.S. Steel and other steel manufacturers, right? So the ticker symbol, right, what you punch up is AKS. The stock is at $8.02. That's where the stock is, all right? And the covered call, the just out a month and a half or so, like, I don't know, 6 or 7 weeks, right? The $8 call is going for 76 cents. I think it was 76 by 79. Let's just stick with 76 cents. Now let's give you both of them. 76 by 79, right? This is the bid and the ask. If you were to buy this option, you would pay 79 cents. One contract would be 79 cents or $79. 10 contracts would be $790. Okay, we'll get to that in just a minute. This is the bid. This is what you would sell it for. So if you call your broker and you say, I want to write a covered call, I want to sell that option, you're going to sell it at 76. Now you can put in an order at 78 or whatever. All right. But if you're doing it at the market, you're going to get 76 cents. So stick with the 76 cents. Now we're going to do it completely backwards, right? Instead of just playing the option, right? Those are too risky. Remember, up, down, or sideways? No, 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 no. Let's sell to those people that have bought this option. All right, so let's go buy the stock. We're going to cover up this trade. We're going to own the stock so that, as remember, we're going to sell an obligation, and we have an obligation to deliver. Now, if you're brand new to this, please, please don't despair. Boy, I tell you what, the first day I learned this, I sat there with my stockbroker for 4 hours because I didn't get it. You know, this is such an incredible thing. I just couldn't believe that I could make that much money, and I had to have it explained to me over and over again. And I've done about 10,000 of these now, and I'm telling you, it's worthy of the study. It's worthy to get to know this process. Matter of fact, I'm going to make it a little bit even better for you. Because see, as I teach this, I know that people are saying, well, where do I find these? How about this? When you see this, I'm going to pose a question to you right now, and I'll pose the same question in a few minutes. What if I could show you a deal like this, or our whole team could show you a deal like this, or 4, 5, or 6 of these every week? But let's give you one a week, right? Where you could make about $1,000. That's why we call it TDT, $1,000 Thursday. Once a week, we're going to give you several deals where you can make $1,000. Matter of fact, in this example here, we're not going to quite make $1,000, but man, it's pretty cool because this stock is at a good level right now at 802. All right, got to teach you a couple of things. One of them is this. We're going to buy 1,000 shares. Again, for those of you mathematicians, right, everybody in your brain take 1,000 times $8. 1,000 times $8 is going to be what? $8,000. $8,020. Okay, so $8.02 would be $8,020. Okay, time out now. You can put up the $8,000 and buy 1,000 shares. But with margin investing, do you know that your broker will loan you half that money? You don't have to put up $8,000. You can put up $4,010, and your broker will loan you the other half. Now, you know, then they're going to, you know, they're going to benefit because they get to do a bigger trade, they get bigger commissions, et cetera, et cetera, et cetera. But you need to understand margin investing. Now, there's a lot of cautions about margin investing, but right now, all you have to do is put up $4,100. Now, on the same phone call, right, you say to your broker, well, I want to sell it, or you do it online, one of these online accounts. And I want to sell 10 remember, you got 1,000 shares, so we're going to sell 10 of these, 10 contracts. That would be $760. Here's the point. Somebody, you sold this. You didn't buy this option. You sold it. Now, what did you do by selling it? You put cash in your account in 1 day. 1 day. Stocks clear in 3 days. Options clear in 1 day. The very next day, you have $760 into your account. What have you done? You are obligated now to deliver your 1,000 shares of stock to someone at $8 anytime on or before the expiration date. Well, tell me what's going to happen now. What's going to happen with that stock? Do you remember? Up, down, or sideways? What's going to happen? Well, one of those 3 things. What happens if it goes up to 440? I'm sorry, to 840, 850, 860? Well, you're going to sell it on or before the expiration date. Are you okay with that? Yeah, you lose 2 cents. That's $20, right? You lose 2 cents. What about the 760? Yeah, you get to keep that. You get to keep the $760. Stock's gone out of your account. All that cash, the full 4,000, the full $8,000 or whatever, is back in your account, and you just made a profit of $760. By the way, what could you do with that money? Pay your bills, buy a nicer car, get ready for retirement. If you had 5 or 6 of these, right, could you retire? Take 5 or 6 times $700, you know, that's $30,000, $40,000 a year. Remember, we're trying to get you to the $9,000. Going to build up that grouping of assets, that will spin off the income that you need to live on. Okay, what if the stock goes down? If the stock goes down, what happens? Well, you don't get it taken away from you at $8. Why would anybody buy the stock at $8 from you if they could buy it in the open market for $7.40? They wouldn't, but you get to keep the $7.60. What if the stock goes sideways, stays right around $8, maybe $7.99, and you don't get called out, right? Which means to sell. You get to keep the $760. What would you think if you could take $4,000 and make $700 or $800? Now you did it this month. You still have the stock in the account if it didn't get taken away from you, and you could sell it next month, $850. The next month after that, $670. The next month after that, another $740. You have a stock, and you use that stock as a basis for taking in that income from a third party, somebody in the options marketplace that wants to buy the stock. You want to sell to them the option. It's a pretty cool relationship. All right. So you got your place on your outline there for another deal. What do you think about that, by the way? What do you think about getting assets to produce income? This next one, I'm going to start with a very small number. Okay. It's OAS. Now, I got to tell you guys, OAS right now is at $13.90. $13.90. Let's just go buy 100 shares. That'd be $1,390. 100 shares, not 1,000, 100 shares. But with $1,390, you could actually buy 200 shares, right? So you have 200 shares. Okay, the same month out, you have the $14 calls. Okay, sorry, I got to look around. The $14 calls are 95 cents. $14 calls are 95 cents. Now, those of you that don't have a lot of money, think this one through, because you're going to start with $1,300. And a lot of people say, well, how much money do I need to get started? I usually say $800 to $1,200. And then the commissions take up a little bit of that. So you're not going to get rich this way, but you can start building up a grouping of assets that will produce bigger money as you can do more contracts. All right. So you have $1,390. You own 200 shares. So now you sell two of these, 2 times 100, 2 contracts is $190. You say, what? And by the way, if you get called out, you see that $13.90 up to what? Up to the $14 call. That's another 10 cents times 200 is $20, right? So you'd have $210 again minus commissions. All right, I'm just going to leave those numbers on the screen and let you catch your breath. I know I have a tendency to talk quickly, but I get so excited about these. I get so excited when I see people and our members of TDT writing us letters saying how the bills are able to pay off and what they're able to do. It is fun, right? And I'm going to tell you about Harry here in just a minute, but this is important, guys. Look at $1,390. I am making over a 10% monthly return. Yes, I use margin, but I'm getting $210. Again, if you're 70 years old and in your retirement account, you have $1,300. And by the way, you can do this in an IRA, right? You can't do margin, but you can do this this type of trade in an IRA. My goodness, $1,390 making you $210. Could that change somebody's life? What about a college student? You send off your son or daughter to college, say, here, I want you to do this every month with this stock, and you're going to make $190 one month, and you're going to make $220 the next month, and every month you're responsible for generating income. Well, that's what this does. Now, let me tell you one negative thing about writing covered calls. You've sold away the upside. If you really think this stock is going to go up to $30 or $40 from the $13, you shouldn't write a covered call. Because when you sell and you've agreed to let somebody buy it from you at $14, you basically have taken in cash and you've given away everything above the $14. Okay? So you may not want to do that. Let me tell you about Harry. Harry came to one of my earlier seminars, and he went out with straight options, just like what we did here today. Got into a couple of really hot deals. I think he started with $13,000. It may have been $18,000. I can't remember, but around $13,000. And he went out and made, in 6 months, he made $80,000. Now, Harry was like 56, 58 years old, looking for retirement, did not like his job, did not want to go to work anymore, was tired of working for someone else, tired of working his whole life, with so little to show for it. One seminar event, one batch of trades and basically straight options. He has $80,000. So he went to his wife and said, honey, I want to quit my job. Okay. What's a typical wife going to, oh, I shouldn't say that. That makes everybody sound, ordinary. In Japanese, I say futsu. Well, wives are not futsu, but they are concerned, right? So what did she say? What do you think she said? She didn't say, okay, go ahead and quit your job. No, she said, do it again. Do it again. In the next 6 months, you take and see if you can make another $80,000, and then we'll talk. Well, you know what? He spent several months trying it. He couldn't do it. The options weren't working right. Remember, options? Man, there's so many people lose money in options. Well, he didn't do it. So he turned to the other strategy that we taught there was selling those same options that he was now losing a little bit of money on. And he didn't build up another $80,000. But in using the $80,000 to write covered calls, he started making $6,000 to $7,000 a month, every month. Now he went to his wife after 6, 7 months of doing this and said, honey, let me show you my account. This is what I've been doing. I've taken this money here and I'm making $6,000 to $7,000 a month. I'm not sure, but I think that was about what he was making at his job. But now he had income coming in, 6 months track record of showing that he could make monthly income. So if that's what you want, monthly income, all right, I'm sitting over here. Team Wall Street is sitting over here saying, hey, here we are. Here we are. We'd like to help you do that. So let me tell you a very important point. If you'll write this down, somewhere on the page there, I'm going to show you a pricing structure here in just a minute, and the benefits that we can that we can provide for you. A quick little marketing lesson: the difference between benefits and features. Features and benefits. Benefits and features. What are they? Right? A feature is something that stays with a product or service, whether you buy and use it or not. A car has the best carburetor on the market. Well, whether you buy that car or not, it still has the best carburetor. A house has a fenced yard. The benefits of having a fenced yard, it's a feature. You don't get the benefit of the fenced yard unless you buy it and live there, right? A benefit is described as something that can only be derived if you buy and use the product. So when I teach, I try to teach as benefits. What do you need? If you look out at your future, what do you need? Do you need more cash flow, tax write-offs, and growth? I contend that you need more cash flow. Rarely, never has anybody ever come up to me and said, hey, Wade, you do all these seminars. Can you show us a seminar how to make less money? Hey, Wade, my girlfriend here, we're getting married, and we think that two can live cheaper than one. Can we make less money? Nobody's ever said that. Everybody wants more income, bigger house, nicer car. Everybody wants, and that's great. We look out for our own selfish, special interests, right? And we build up a lifestyle. And you know what? How many other people benefit when you make more money and buy a nicer car? How does your church benefit when you're able to pay $800 some month instead of $80, right? Look around you. What benefit can you be to the world? Now, again, I'm not saying you need to become a covered call writer. So, because I'm going to enlist a whole army of people. No. I want to enlist a whole army of you that want to have another baby, that want to donate more money to your church or to a charity. There's so much work to do in this world, so much good that can be done, and a lot of it takes money, right? So what can you do? Money is not the end all be all, but could you be, this is a weird question, I know this, and I like quality questions. Could you be a better you if you had more money coming in? Could you give more to your church? Could you send your kids to a nicer school? Could you buy a little bit nicer clothes? Could you be a better you if you had more? Now, I'm going to ask you another one of these quality questions. If you could design your own educational package, this is the way I want to, this is the way I need to be educated. All right. While you're thinking of that, I'm going to pose something to you. I do a lot of radio and TV talk shows. And sometimes I sit across the wall or the window there, and I see the radio engineer and they're pushing this and doing this. And man, they're so good at that kind of stuff. Here's my point about the radio engineer. TV is the same way. driving a race car, it doesn't matter. Everything that you have learned how to do and to do well, you were hand trained by someone else. You didn't learn how to drive a car by reading a driver's ed manual. Oh, I want you to buy my books. I think I got the best books out there, right? And if books made you rich, librarians would be the richest people in the world. What do you need as far as training and education? If it were me, I would want someone who's been there before, done hundreds, even thousands of trades. I don't even care if that person's a little bit boring. I want people who are real, are in the trenches, you know, and make real money and can show me how they do it. Well, that's what I do. That's what we do, right? So I looked around. I got two points to make right now. I looked around and I said, what is it that people need? 1 million people have been to my seminars, way over that. 2.5 million people have bought my books. That's why I got all the bestsellers. That's cool, right? What do they need? What do they really want? What are they attracted to when they come into a Wade Cook event, Wade Cook seminar, or get involved in one of our services now online? What do they want? What do you want? You're watching right now. What do you want? Well, they need income, cash flow, tax write-offs, and growth. You need more cash flow. So if you need more cash flow, do you need it where you have to go work harder, get a second job? I don't think so. They need more cash flow. They need more income, but they need it from a separate, independent source, independent from them. Money that will come in and keep coming in, you know, so they can quit their job, so they can retire better. Then I looked and I said, well, what do I have to offer them? And I don't want to do something that's in competition with a whole bunch of other people. Right? There's all kinds of people that teach stock market seminars. I dare say you'll ever find one that teaches writing covered calls and does them in a way after doing tens of thousands of trades, so I can bring all of my experience, all of my know-how, and the wisdom I've gained and everything I've learned over the years doing thousands and thousands of trades to you. And by the way, I don't get anything out of what you do. I'm a pure educator. I'll sell you a book like Wall Street Money Machine. I'll sell you a book. I'll sell you a service. So I sat back and I thought, okay, I have got knowledge and wisdom and passion for stock splits. I love stock splits. I love rolling stock. I love rolling the Dow, the market that goes up and down. I love IPOs a little bit, you know, but they're not for everyone. There are 5 different complete strategies that we teach. One is spreads. One is writing covered calls. See, I've gone through just one of them today. But how would you like to get a deal like this once a week, or 5 or 6 or 7 deals? And how would you like to get, so that's what we call TDT, $1,000 Thursday, right? $1,000 Thursday. We bill it out as a brand new deal every week. That right there, if I were charging $1,000 a month, after a couple months, you'd say, whoa, this is the best money I'm ever spending. But it's not, everyone. We have that billed out at $197. And right now today, for all of you that sign up today, you get this for $97 a month. And so $97 is the tuition. And people say, well, what does it cost? Well, I'm sorry, are you asking what the price is or what the cost is? The price is $97 a month. The cost, well, what does it cost if you don't get it? It's thousands upon thousands of dollars, right? It's a lot of money. So the cost is, you know, you look at it and you say, well, what is the cost? See, right now, everyone, you're kind of like going down this road. You're moving on down this road. And right now, you're at a fork in the road. You say yes, or you say no. If you say yes, well, look at what happens if you say no. Well, you're on your own. You don't have a team behind you. You don't have all of us working for you and bringing you deals and helping you through them and all that, right? So if you say yes, you put an incredible force behind you. All the things that we offer do. So let me show you some of those, right? We have part of the service, and I think it's billed out at $1,795 called Trail. Trail is this: trading, research, and information library, right? $1,795. It's worth tens of thousands of dollars. hundreds and hundreds of postings on all the different deals that we've done that you can, they're archived. You can go back and read them. What we do, new deals, we put them on there. I just made 2 postings yesterday, right? $1,795, right? Well, we're throwing that in for free. So your $97 gets trail for free. And we have paid to trade. Now, it is really hard to put a value on this, right? We retail it at $995. This is a magical component of your success, and it will be. Most of our people that are members love paid to trade. They contact us all the time. They love it. Paid to trade is 10 lessons. These lessons are based on my $4,295 Wall Street workshop that 80,000 people attended. This is an amazing course. It's about 200 pages plus, right? And right now, by the way, we want you to have it for free. For free. You're going to get paid to trade with this, with $97. Now, all this is right at the end of your outline there, and there'll be a link here very quickly where you can see it. Now, I want to tell you about a second part. That's a package number 1, right? Let's just call package number 1 the TDT package. Package number 2 is what I call the webinar package, right? You're not in one of the webinars that goes with package number 2 right now. Income builders we have for the general public, right? But a webinar, here's the way it works. We have 3 of them, but one of them is done twice a month. Tuesday night training, or TNT. Every Tuesday night at 6, not every Tuesday night, the first and third Tuesday of the month, 6 p.m., and then it goes across the country, 8, 7, 8, 9 p.m. This is about a 1 hour, 45 minutes to 1 hour training for our members, right? It's a 145 or 245. That's 145 each, right? Times 2. Okay, and then we have Wednesdays with Wade. Around the 15th of the month, whatever Wednesday is closest to the 15th of the month, you're going to spend the evening with me. This is $289 or $299. What is it?
289. Yeah, one of those.
One of those, $289 or $299,
yep,
to spend an evening with me. All right, Wednesdays with Wade. And the third one is called eFit. We all think that this is going to become, we've done 2 of these now. This is going to be, I did them a long time ago, and it was popular. You know that expiration Friday? We talked about the 3rd Friday of the month, like writing a covered calls. Well, what if that stock, like Oasis, is right around $14, and you want to get called out or you don't want to get called out? You're going to wrestle with it. So the 3rd Friday of the month, we get together and we wrestle with all these deals together. You can bring your own deals. We'll have several there for you, and we show you what to do on expiration, how to buy back the option, how to roll out, how to sell the weekend. This could be easily worth hundreds of dollars, up to thousands of dollars every 3rd Friday. And we mean it. We've done a couple of these now, and people love it. So this event is, how much is this one, Brandon? $249? Yep. $279 or $249, whatever. All right. This whole package, the webinar package, you can get right now for $129 a month. $129 a month. And so you're going to get basically 4 major seminars. And if you like what I did today, if you like my style, imagine when I can, you know, not have to go through so much of the beginner stuff, because there's a lot of new people on here, but we can really get down into the good nitty gritty stuff. All right. Well, right now we have the $97 basically for package number 1. All right. We have package number 2, which is $129. We don't want you to say no to this. You know, we don't want you to say no. So right now, we're going to include package number 2 with package number 1. So basically for $97, and that's what it says on that the rest of the outline. Now, I need to ask you one more question as you're making up your mind. You know, if I walked up to you and said, here's $100, right? I mean, if you'll give me $100, I'll give you $1,000. What would you say? A lot of people say, well, that's not real. You can't do that. Well, yeah, we do that. And by the way, we've been doing our TDT for about 3 years right now. Do you remember what our profits are up to now? I think it's like $2.7 million, $2.8 million in deals that we've given to people. Have we had a few bummers? Yeah. You know, we try to mitigate those, right? But boy, we sure show people how to make a lot of money. So I need to pose something to you and then ask one last question. Most of you watching right now are not going to get rich. You're not going to get rich. You know, think about it. Most Americans retire. 90% of people have to substantially cut back their standard of living when they turn 65. Why? Why? Most of you watching will not get rich. Now, I know I'm going to step on some toes here. I don't mean to be offensive. Just bear with me for a second. Maybe you'll like me again in 60 seconds, right? Most of you are not going to get rich because you simply do not deserve it. You do not deserve it. You haven't paid the price, right? What knowledge have you gained that qualifies you to be rich? What experiences have you had that qualify you to be rich? See, most of you have not had them. You've not had the experience. You've not gained the knowledge that qualify you to be wealthy. Well, it's truly a wise person that can learn through the experiences, the knowledge, and the wisdom of other people. I think that you know that a wise person, well, and I hope you are, and I think that's why you're here, has realized that they need that extra source of income. Well, that's where we step in, right? So my last question, and I hope this really gets you thinking, because this is where we want to help you. We don't want to help you be busier. No. We want to help you paint a picture of your future. But when we help you paint a picture, down here in the bottom, there's always that little exit door, the exit strategy. Know your exit before you go in the entrance. Here's the question. If money were not an issue, if you didn't have to worry about money, if money was not an issue, you had enough coming in to live on, what would you do with your life? What would your life be like if money was not an issue? Focus on that. And then join with us. Let us help you get on down the road where you've got excess money coming in, more than enough to pay the bills, more than enough to get out of debt. And that's what we want to help you do.